Have you ever wondered what Bitcoin halving is and how it affects the price of Bitcoin? Bitcoin halving, as the term suggests, is an event where the reward for mining new blocks is halved, meaning the number of new Bitcoins created and earned by miners decreases by 50%. This halving process happens roughly every 4 years, or after 210,000 blocks have been mined, as a part of Bitcoin's monetary policy, which is encoded in its source code. This ingenious mechanism was created by Bitcoin's anonymous founder, Satoshi Nakamoto, to control Bitcoin's supply, much like how central banks use monetary policy to manage the supply of traditional currencies. Its purpose? To slow the rate at which new Bitcoins are created as we get closer to the maximum supply of 21 million Bitcoins. So Bitcoin halving is fundamentally a mechanism to reduce the supply of new Bitcoins entering the market. But what impact does it have on Bitcoin's price? The relationship between Bitcoin halving and its price is indeed intriguing. To fully understand this, we need to delve into the fundamental principles of supply and demand. These principles govern pretty much everything in our economies, and cryptocurrencies like Bitcoin are no exception. When the supply of an asset decreases while the demand remains constant or even increases, the price of the asset tends to rise. This is exactly what happens during a Bitcoin halving event. Every 4 years, the reward for mining Bitcoin is cut in half, effectively reducing the rate at which new Bitcoin is created. This essentially means that the supply of Bitcoin is decreasing. Now let's take a step back and look at the past to get a clearer picture. The first Bitcoin halving took place in November 2012. Before the halving, Bitcoin was trading at around $12. A year after the halving, the price had skyrocketed to over $1,000. Fast forward to the second halving in July 2016. Before the halving, Bitcoin was trading at approximately $650. A year later, the price had jumped to around $2,500. And let's not forget the most recent halving in May 2020. The price of Bitcoin at the time of the halving was around $8,500. Fast forward a year, and we saw Bitcoin reach unprecedented heights, peaking at just over $60,000. These historical events seem to indicate a clear trend, a significant increase in Bitcoin's price following each halving. But it's important to remember that correlation does not necessarily imply causation. There are many other factors at play that can influence the price of Bitcoin. As we've seen, past halvings have led to significant price increases. But can we expect the same for future halvings? Predicting the price of Bitcoin post-halving is not an exact science, but it's an exciting topic to explore. Let's dive in and dissect the numerous variables that can sway the price of Bitcoin following a halving event. The first factor to consider is market sentiment. It's a powerful driver of price movements in the world of cryptocurrency. If the majority of investors expect the price of Bitcoin to rise post-halving, their buying actions could turn this prediction into reality. Next, we have regulatory changes. Governments around the globe are still grappling with how to regulate cryptocurrencies. A favorable regulatory environment can stimulate investment and drive up the price of Bitcoin. However, restrictive regulations could also dampen investor enthusiasm and pull prices down. Technological advancements serve as another key factor. The world of Bitcoin is not static. It's continually evolving. Innovations that enhance the functionality, security, or efficiency of Bitcoin could boost its appeal to investors, potentially leading to an increase in price post-halving. Then there are macroeconomic factors. The state of the global economy can significantly impact the price of Bitcoin. For instance, during times of economic uncertainty, Bitcoin, like gold, can be seen as a safe haven asset, and its price may rise. While many predict a price increase post-halving, it's essential to understand the risks involved in investing in Bitcoin. Bitcoin's past performance is not a guarantee of future results. The price of Bitcoin can be volatile and unpredictable. And while halving events have historically been associated with price increases, there are no guarantees this pattern will continue. In conclusion, predicting the price of Bitcoin post-halving involves considering a wide array of factors, from market sentiment and regulatory changes to technological advancements and macroeconomic factors. It's a complex and fascinating process, fraught with uncertainty and potential rewards. While Bitcoin halving can lead to price increases, it's crucial to consider all factors before making investment decisions. So, we have explored what Bitcoin halving is, its impact on Bitcoin's price, and the factors influencing price predictions post-halving. Let's take a moment to recap what we've discovered on this fascinating journey through the world of cryptocurrencies. Bitcoin halving, as we've come to understand, is a mechanism built into the Bitcoin network that reduces the reward miners receive for adding new transactions to the blockchain by 50%. This event takes place approximately every 4 years, and it's a fundamental part of Bitcoin's deflationary economic model, designed to control inflation and enhance the digital asset's scarcity over time. We've also delved into the intriguing relationship between Bitcoin halving and its price. Historically, each halving event has been followed by a significant surge in Bitcoin's price. This is largely attributed to the increased scarcity of Bitcoin, stirring up market demand and driving up the price. However, it's crucial to remember that while the past may give us hints, it does not dictate the future. The cryptocurrency market is notoriously volatile and influenced by a myriad of factors. Global economic conditions, regulatory changes, technological advancements, and market sentiment all play pivotal roles in shaping Bitcoin's price trajectory. As we have discussed, predicting the future price of Bitcoin, particularly post-halving, is not a straightforward task. It requires a careful analysis of various factors and a keen understanding of the complex dynamics at play in the crypto market. In conclusion, while Bitcoin halving has historically been associated with price increases, it's essential to consider the broader picture when predicting future prices. The world of cryptocurrencies is a volatile and unpredictable one, and Bitcoin halving is just one piece of a much larger puzzle. Remember, investing in Bitcoin or any cryptocurrency involves risk, so always do your research and consider your financial situation before diving in. Until next time, keep pondering on the mysteries of the crypto world.